So thank you so much, Rich, for coming on our podcast. Our podcast, as you know, is called as the 2040 Banker. And in this podcast, we invite a lot of bankers. And the idea is basically to learn how banking has evolved in the last 2 decades and what can we expect in the next couple of decades. How would it evolve even further? So that's the main agenda. And I'm super delighted to have you today on this podcast. And for the audience, actually, I just want to mention, when I was first introduced to Rich, I was told that the books with which people typically read banking, those books have been written by Rich. So this is how Rich was introduced to me. And this has actually proven to be absolutely true. I've known Rich for a while now, and every time I speak to him, I learn a lot from you, Rich. So thank you so much for coming here and sharing your wisdom and knowledge. And without any further delay, what I'll do is I'll just get into the first question or the first introduction that I want you to do. And from broadly, so I know very broadly about your career that you were you were the CIO at PNC. You recently left PNC, but you have a deep background in technology and banking. So why don't you just start there and we'll just set the stage there.
Sure. Nitin, I really appreciate the kind words. And, we met back in January, I think, for the first time. And I have a ton of appreciation for the relationship. And I learn from you every time we chat as well. So, I could go on and on. My career spans more than 3 decades. So I'll keep it mostly to the banking side of things. Actually, as Nitin mentioned, I recently retired from PNC at the end of last year. I've been spending time, some time recharging and traveling a little bit. I actually was in India for a wedding, doing a little advising and consulting as well. But the prior really 13 years I spent at PNC, and that was my second stint at PNC actually. So my first stint at PNC was back in 1999 for a couple of years. I actually left an internet startup along with a few other folks to come into PNC to help build their first web-based banking platform. The internet startup experience that I had was something that PNC was interested in. And again, there was a group of us who actually came. And we built that web-based platform. It was called AccountLink at the time. Okay. Before that, PNC used sort of an off-the-shelf web portal from Fiserv, which was pretty common at the time. Again, that probably started about 1996. And after a few years of that, PNC recognized that they wanted to control the experience, that the web wasn't going away, that it was going to be strategic, and it was something that we needed to build in house. So I did that. I launched. We took us about 2 years, right short of 2 years. We launched that, and then a few months later, I decided banking wasn't for me, and I I left actually to go to a tech consulting company, like a boutique, sort of high tech consulting company, and I did that for a while. I actually had a stint in healthcare as well, and then maybe 5 or 6 years later, I was drawn back to PNC. Actually, in our corporate bank and in a healthcare business that they had. So, I spent time there, and I was given an opportunity back maybe a little over 10 years, 11, 12 years ago now, to lead PNC's innovation incubator, which they started for their corporate bank. I left a team in healthcare where I led the technology organization there. I left that to be an individual contributor initially. Essentially, they said, "Hey, go start this innovation function, and we'll build a team around you." Right, and I spent 6 years doing that. Innovation is in my DNA. It's a big part of who I am. That'll probably come through today in our discussion. So I spent six years doing that. We launched a bunch of products, ton of value, and then I was given the opportunity to lead lending, become the CIO of our our retail lending organization, which included small business and retail, everything from credit cards and auto loans to home equity and mortgages. I also had our marketing function as well. And, mid last year, I had the opportunity to announce my retirement, and I sort of wrapped up the end of the year. And here I am. So that's a little bit about me. Again, I would say I'm not your typical technology leader. Maybe I'm still extremely technical. In the time that I've spent here over the last 4 or 5 months, I've done a bunch of hands-on development just to sort of stay close to things, and I've really spent a lot of time with Gen AI, right? Because it's the latest trend, but for good reason. So I wanted to understand sort of the art of the possible there. So that's a little bit about me.
Yeah, thank you so much, Rich, for sharing that. And I love the part where you said that maybe banking was not for you, is what you realized back in 1999, but you kept coming back to banking. And this is what I've seen actually. People who have been in banking once, they keep coming back to banking one way or the other, whether it's a fintech or it's a financial services. So that keeps on happening.
Yeah. I think when I said banking wasn't for me, I'm as I mentioned, I'm an innovator. I like fast pace. I like tech, and once we launched the internet banking platform, I'm like, okay, now it's sort of business as usual, and I wanted to go move to something challenging again. What I've learned is banking has a ton of challenging problems, right? It's a never-ending backlog of challenges. So, that's what's drawn me back.
Absolutely. So since you mentioned that you were in banking in around 1995, 99 and all, so you have seen a couple of decades or more than that actually in banking. So how did you see, how did the overall banking technology stack specifically, how did you see that evolve? And any specific events that you would want to highlight during that period? Sure.
I mean, I think I do. Maybe it's my bias because I helped launch the web-based banking. But if you just think about sort of the landscape over the last 25 years or so, I would say there was an inflection point with the internet banking, web-based banking. That was like a massive change to what banking is and to the technology side of it, right? So, prior to web banking, I would say technology was more in the back office, right? Banking was still done, at least in the States, in the US, banking was still done at branches with tellers, right? It was indirect. ATMs had some presence for some, mostly, cash withdrawal, but technology was in the back, right? It was in the back office. It was plumbing. It was infrastructure. Sure. And with the move to the web, it was front and center, the expectations around it changed, right? It was now 24/7. The customer expectations, right? 24/7. I think the mindset changed. I would say it's taken time, but it used to be, and I saw this even in my first stint. It was part of the reason I left, right? Is technology was a cost center. It was more about the expenses and trying to minimize, cost. And it's changed certainly over the last 2 decades to where it's a strategic enabler, right? And that's with sort of every step of the way. But I would say that was the inflection point. Certainly, to me, with mobile, you move from web to mobile, right? Where although web-based banking was used once it's like in your pocket, it's with you every day. The demands increased, even more. And then I really saw in my time here at PNC, like the next big inflection point was fintech. Right, there was a ton of competitive pressure because of the neobanks and then also just very, I would say, targeted fintech solutions for everything in banking, on the retail side, also small business and to a lesser extent commercial. And so there was a reaction from the banks to really double down on their investment, right? Like we're competing with these companies, and there was at the time it was there was a sense that was a real threat to banking, right, to the traditional banks. Now I think in retrospect, right, it's just changed how we've responded. The bigger banks have responded, but that was a big deal, right? That okay, now we have to double down our investment. We need to, in web and mobile banking so that it's great customer experiences, and so that has meant that's more from the business side, but from the tech side, it's also there's the analogous changes that have had to occur there, right? From being mostly batch based, mainframe based, to needing to be more real time. The whole tech stack has changed, right? Because it's now externally facing. So you have, identity and access management, fraud, all the cyber has dramatically changed.
Yeah.
10 years ago ish at PNC, the cybersecurity team was like 10 people. We have over 1,000 people in cybersecurity today.
Oh, wow.
It's cyber plus privacy plus fraud, right? AML. That's a massive investment because of the risks there. So it's been quite a journey. I would say it doesn't look anything like it did when I started. The entire tech stack's different, and I do feel like we've embraced agile. Right? It used to be more waterfall, much more functionally, or the way we've organized is different, right? It used to be much more functionally organized or technology organized. Now it's much more, I would say, product and platform organized, right? So it's really transformed everything in banking.
Got it. And Rich, I think you are the person that I've met who has mastery in both commercial as well as retail. Otherwise, most of the times you would know that people have done they're highly specialized in commercial or highly specialized in retail throughout their career. But having worked in both the kind of verticals, how did you find specifically the technology roadmaps of the two different?
Yeah, I'd say they're very different, right? Retail is a high scale, low customization. Business to consumer, right? If you look at the commercial and especially the corporate side, like the higher end of the commercial stack, it's a B2B. It's a B2B market, right? And so it's still very much a relationship-based approach. So I would say at the core, the technology, like in terms of, the tech stacks are the same. But what the focus is different. I think with retail, it's about scale. It's about everything digital, marketing digital, et cetera. With commercial, it's about technology augmenting or supporting the relationship between our bankers in the corporate bank and the customers. Right? It's not about direct to the customer. So the technology is different there, right? The portals are different in terms of the features. There's a lot of self-serving capabilities in corporate and commercial, but there's also a lot of how can we help our relationship manager or the banker or in treasury management, which is the more transactional side of the commercial business? How do you enable those folks? Again, I would say, it's technology's critical in commercial, but it enhances the relationship. It doesn't replace it. And a great example would be, and this was really a learning for me, because everybody is a retail customer, essentially, right? We're all customers of the retail bank. And so everybody, even those not in banking, sort of get what retail banking is. And in the commercial side, it's very different. And I was like, oh, let's do digital marketing in commercial. And they're like, slow down, new guy, right? It's like, we're not pushing offers to our customers. Like, we're going to take them out for golf and dinner. It's like, oh, big difference.
So true. Yeah.
So it is very different. What I would say from an innovation, because my time in commercial is mostly in innovation. I think retail is very crowded from an innovation perspective. That's where everybody focuses. I think partly because of what I said, right? Everybody sort of knows it. So, a bunch of startups were there. There's a lot of white space still in the commercial space. And so it's commercial is more complex, but it's a lot more wide open to innovate. But yeah, like at the core tech stack, it's all the same technology. As an example, the core that we use for commercial and retail is the same core, right?
Yeah.
And the layers above that, they are different portals and slightly different tech stacks just because of aging and stuff. But yeah.
And on that, Rich, do you think the talent that a bank would require to run commercial or the retail side, is that also different?
I don't think it has to be different. What I would say is generally retail's more on the bleeding edge. There's more invested into retail as well. So there's more money, there's more happening, right? So the roadmap is busier, but I don't think the talent has to be different. In the end, you're still building digital experiences, and there just may be more than just our customer in the workflow, right? Often there is a view that our banker has, like with customer relationship management, we use Salesforce, but I would say even within the portals themselves, right? It's not just, hey, here's the customer using the portal. Our sales folks can get in and sort of help see what the customer sees and help navigate, because that's the nature. It's very relationship based. But what I found, and it's not unique to PNC, is generally the retail bank has, I'd say they're a little bit more advanced on the tech front.
Understood. And Rich, you kept talking about commercial and retail both having the same core, both sharing the core. So I want to talk a bit about the core. I think when banking started, like you were mentioning, it was mostly about the backend processes or automating a lot of the plumbing stuff. Then it came around internet banking, then mobile banking. But during the course of journey, the definition of core keeps changing a lot. Today, when we speak to a lot of banks, the definitions are widely different. So unless you're talking about a specific brand, that's where everybody is clear what they're talking about. But a lot of people start talking about that even their CRM today is becoming their core. Some people would say that their loan origination system is also actually part of the core itself. And the way things are headed, so you're talking about fintechs and all, some kind of open banking and all. What do you think where the core is headed? Is there a line that we can draw today?
Yeah, I mean, I think you can see where things are going. So first of all, I would say, historically the core, it's the system of record, right? It has accounts, balances. It's the ledger, maybe product specific entitlements. I would say though, right, it's been more monolithic historically. And where things are going, and I would say we've seen it in the last 5 years especially, right, is it's going towards I would say, you hear the term modern core now, right?
Yeah.
There's the emergence in the last 5 years of this concept of a modern core, which tends to be cloud based. You might be able to run on-prem, but cloud based. It's modular. They've been mostly built API first, right? So that you're able to wrap around it, right? So that you're not building orchestration, you're not building any sort of decisioning or experience, certainly not experience into the core. And I know JP Morgan, right? Chase with Thought Machine, and Zeta, who's a card core. I would say they also have a deposit core, a Mambu, right? Like, this is where it's going. I think it's a marathon, not a sprint, because these core modernization projects are super expensive, and you're not just going to do it to do it. It's going to have to be to the point where you're feeling the pain pretty significantly. But that is where it's going, and the concept of sort of composable banking, right? So narrow down the core, deposit core as an example, right? Separate from credit card, separate from mortgage, right? Narrow down the services around it so that it's really just the ledger, essentially, right? And in a thin layer above that. And then weave, compose and orchestrate around that, right? I think that is where it's heading. I just don't think it will, it's not going to happen overnight. I think it's a massive investment, but PNC is going through that right now, right? We're, multiple years into it. Right, it's just not a simple, rip out the heart, replace it, heart transplant, right? I think that's at least a decade.
That's true.
Yeah, but that's where it's heading. I think it's the right vision.
So, Rich, you brought in very interesting point here when you're talking about that there is one core. So, what I understood from what you explained, that today's modern core would have a built-in API support. So, or they would be API first kind of a core. And we don't know, I think in 5 years down the line, maybe it might be something which is based on AI first kind of a core. But today it's mostly around API first. And then you were talking about that there might be separate features or separate modules which might be required for, let's say, credit card, or maybe it's a different kind of a lending or deposit products that anybody would want to do. Now, on the similar theme, if I want to see from the perspective of a bank, see, they always have a choice that they just built a horizontal platform which would try to do everything. So it could be, let's say, a core which starts extending towards each of these individual products. Or the other option is you start picking up individual products, or you start building those individual products in front of your existing core, which is more verticalized solutions. So when it comes to banks, I want you to help us understand two things. One is, in a scenario between build versus buy, how those decisions or how those things are perceived. And secondly, even if it is a build decision at the bank's end, how would the bank typically see this opportunity where they're building individual products which are aligned to specific line of businesses versus actually building a horizontal platform which is catering to multiple line of businesses? How is it actually done, and how do you see that evolving?
Yeah, I think this is going to be an interactive part of the discussion, because that's a big question. I would say. Right. Let's just define product and platform to start. Right. The difference. Right. A product is something that is directly used by a customer of some sort, whether that's an internal or external customer. Right. And a platform is an enabler to building those usually. Right. So let's start there. What I would say is, in larger banks anyway, PNC being one of them, and I'm well aware of the top 10 and how they've approached things. the organizations are really big and they tend to be siloed. So it's very common that each product is built differently, because the decision makers are different, right? It's Conway's law, right? And that's very common, right? That and the bigger the bank, the more the bigger scale they have, and therefore the more silos they have. So at PNC, lending on the consumer and small business side was something that was under one business leader, and I was the technology leader for that. So everything, credit card, personal loans, auto, student, mortgage, home equity, and then some of the small business lending, we're all under one leader. So that does give you gives you the opportunity to say, hey, there's a lot in common between these things, right? I would say at the bottom end, credit card and basically unsecured personal loans are very similar, and it's a pretty simple experience. Then you get to auto. Now you have a secured loan. It's secured by the collateral, which is the car, right? Then when you get to home equity, it's a house, and mortgage is the most complex of those. There's a spectrum there, right? Yeah. But we had made the decision to say, hey, let's build something internally to solve most of that. Mortgage was probably, I would say, out of the mix just because it's very different in terms of in the U.S. mortgages are heavily sort of regulated. Most mortgages aren't on the books of the bank. They're actually resold to Fannie Mae and Freddie Mac. And so like they're cookie cutter products, they're standard products. So like a buy solution makes sense there, right? But for everything that's sort of a PNC loan, there's so much in common. Why don't we build a common platform? And that was a tough decision. It was a lengthy decision that we made. We went through a sort of a detailed buy versus build. We did prototypes and other things with some of the vendors at the time. We chose to build. It was an expensive endeavor. Sitting here now, if I would look back, I would, I'm on the fence as to whether it was the right decision or not. Mm-hmm. But with platforms, you are, it's platform thinking, sort of recognizing that for one product or one asset class like credit card, you're going to lose money. Right? Yeah. Because it's going to be more expensive. But when you subsequently add more products to it, in the end, it will pay for itself, right? And we also believed, if you look at origination as an example, so applying for a loan and going through that process, there were a lot of other processes that the platform could apply to, not just origination. So collections, when you go, hey, people are not paying on their loan, we have to go chase them down and try to work through the process there. There's a workflow, there's orchestration, like a lot of the same. You're generating documents that get digitally signed, right? There were a lot of the same features. So there was a bigger vision there to say, yes, it makes sense if we tackle all of this. If we're just going to build credit card, it would never make sense. When you go to other banks, like I know, JPMC and Cap One and others, it's very common that, auto is under one team, credit card is another team, and they all make their own decisions. And because nobody's taking a step back and saying, hey, should we, is there a common solution here, right? And it is, in banks, I would say this is a tough sell. Your financial results and a public company or quarter by quarter, right? Investing tens of millions of dollars in something that you're not going to see the return for 3, 4, or 5 years or longer is a tough sell. But so that's. I'm not sure if I answered your question, but that's.
No, you did, Rich. And see, one thing that you mentioned, maybe in the hindsight, a lot of times we think, the decision could have been better. But I believe in banking, especially such complex decision, there is nothing like a good or a bad decision. If a decision was actually taken in such a large organization, that itself is quite an achievement, because a lot of times we see that people are not able to take any decision, but doing a platform like decision which would be utilized by all the teams, multiple verticals and all, I think it's a big win in itself.
Absolutely, and again, I never have regrets, because you're always making decisions sort of point in time with the information at hand. But I would say, if PNC doesn't follow through with the additional products, then it will have been a bad decision.
That's true. That's true. And so, since you have spent a lot of time on lending also, so I want to touch base on lending specifically. So, and you mentioned that there has been a lot of work that has been done on the batch-based processing, but now today everybody needs real-time processing. And when we talk about real-time processing and hosting most of the credit intelligence today, what do you think is the best layer to do it? Since the overall lending stacks have become quite complex, right from the point of core to your decision engines, and then you have orchestration layers, so many layers are there. Where do you think most of the credit intelligence would actually evolve?
Yeah, I mean, I think it's in the sort of, there's a decisioning layer, at least that's the way we approached it, which sits above the core, and not just the core, but a bunch of other data stores as well, right? So it's tapping a bunch of information, both deposit data, lending information, like your full customer relationship. We had something called the CRF, which was the customer relationship file, right? Because it's still, even though it was a real-time sort of data store, the terminology CRF continued. But we pulled data from essentially a bunch of different places, including sort of data warehouse and external signals, right? Well, certainly credit score, right, from the credit bureaus, but also things like income, like from different sources, right? The payroll companies and other things. You can pull income information, right? The idea was to be as digital as possible and use data. I mean, historically, when you would apply for a loan, we'd ask you to upload your pay stub that shows like an image of your pay stub, right? And then we were trying to extract data from that, right, using Doc AI and things. But it's like, no, why not just get the data digitally at the source, right? So let's pull in as many of these sources as possible in digitally. But I would say we viewed that as its own layer. And we did use, we used FICO, which was the underlying platform there. We were actually considering, different decision engines other than FICO as well, and doing something custom there potentially, or using a different third-party product. But it belongs to me. There's orchestration that's wiring everything together. The core or cores, right, are just one piece of that. And then there's a bunch of other sources, right? And the decisioning is sort of its own layer.
And I totally align with that. In fact, Rich, our journey in Refo, when we started, one of the key reasons to start Refo actually was this only, because we were seeing that banks were consuming data from N different sources. And with the advent of fintechs, embedded banking and all, a lot of data sources were coming to the banks, and the capability to actually consume this heterogeneous data sources and then actually do decisioning on top of it was one of the key pain points that we could observe. And anything like open banking and embedded banking even increases this further. So once you have a very strong decisioning engine sitting in front of your core, I think it gives a lot of help. To the banks.
It's critical. And we're evolving it as we speak to be more real time. We just a year ago, right? We were still at sort of a 45 days. Like some of the data we were reading was 45 days old. So you could have defaulted on a loan and we would still
Yeah.
approve you because
That's
that
true.
happened in the last 45 days because we were reading
Correct.
from like a data warehouse and things. So that's just an evolution, right? But it definitely needs to be its own layer and real time enabled with orchestration. Like the Refo capabilities are spot on.
Yeah, but you brought in a very great point wherein you mentioned that reading real-time data, while it is beneficial for the customer, but at the same time it's beneficial for the bank. Like you mentioned that the more real-time data you actually read, better would be your underwriting and lower would be your overall risk. But beyond that, have you seen scenario where real-time actually came out to be more counterproductive in terms of the ROIs?
Well, yeah, there's complexity with real time, right? That I think sometimes aren't justified, right? I do think there's a bias now, right? As technologists, I think we're biased towards do everything real time.
Yeah.
And with everything, every tech decision we make, and just decisions in life, I think, there's a trade-off, right? And so with real time as an example, what and I think with the core as well, right? So one note, right? PNC acquired a smaller bank in the U.S., which is BBVA US, right? BBVA is a global banking organization, but we acquired the U.S. arm. They had a real-time core when we acquired them, but we just moved them on to the core that we had, which was not real-time. But they have some scars from the real-time core, right? One of the things one of the folks mentioned to me at one time is like when you have a real-time core, you make errors in real time, right? Like when you have batch,
Yeah.
when you have batch, like you have chances to fix things before the next day. And
That's true, yeah.
you don't realize how much you take advantage of that, right? But when you have a real-time core and there's a defect introduced or whatever, it's gone. You've made the mistake. So I definitely think there are cases where and frankly, certain business processes are just batch by nature. Like statement generation for a loan or statement generation for a monthly statement, it makes more sense, right? Than even customers wouldn't want daily statements, right? It would be too much for a person to balance against or whatever. So I do feel like you got to judge each place. I'm a fan of batch where it makes sense. I think I think you start with real time, but then you go and sort of have to back away from it in some cases. I mean, the other area is with real time. There's a lot more reconciliation that needs to occur, which is much more difficult when it's distributed or real time versus batch recon is way easier. So I think we have to be pragmatic about where to apply real time.
Right. And Rich, so we keep hearing that now that banks have become so big and they move slow in terms of their technology decisions, and then fintechs have been moving very fast, especially in the last 5 years. That's a trend that we see. And there is constantly a term that is used, which is tech debt. So there is a lot of tech debt in the banking or in every industry, but banking, since we're talking about banking. But do you also think there is some tech equity that banking as a whole industry has created in the last couple of decades, which startups cannot match?
I do think so. And I, just to go back real quick to your point about tech debt. I mean, the reality, like you said, it's not just banking. I think any organization, over time is going to, accrue tech debt. And, it's in any company that's starting fresh is not going to have much, right? So it's sort of just the nature of the beast. I don't view it as a bad thing. But in terms of, equity or things that could be leveraged, I mean, I think the banks have two main things, I would say. One would be sort of the scale and in particular the scale of the data, I think is a massive differentiator. But just dealing with scale in general, like the banks have dealt with it, and have fine-tuned to be able to deal with the scale that they work at, and the data is just incredibly rich and valuable. We've got years or decades of data, transaction data, customer interaction data now with web and mobile. And, if you harness that well, it's a massive moat. It's a massive moat, especially as we move into AI, right?
Right.
And we saw this on the corporate side. It wouldn't be maybe something that you would think about, but, right. I mentioned earlier about sort of doc AI, and and on the corporate side of the house, we process a lot of documents for customers, like, images, and when you want to train models to deal with those images, having like a massive amount of variety, right, of different permutations and combinations of what those documents look like is critical. In fact, we were working with Google back when I was in my innovation space, and they wanted to partner really, really bad because they wanted to get their hands on that data because it's not publicly available, right? Like you can't. The only place that data exists is in the hands of banks, and so that's like one example. But I would just say data in general is massive, and I would say is probably the biggest moat. And I also think it's not being properly harnessed today. Like, you look at, again, you probably don't have a bunch of U.S. bank accounts, but if you just look at what like the virtual assistants and stuff like Erica at Bank of America and what Capital One has and others, they're very, very primitive. Like, there is a massive opportunity there. So that's one. The other would just be sort of the regulatory muscle. Right. So banks have over the years have, built infrastructure that can pass audits, exams, and startups struggle with that. They are always scrambling. I would say, like in the case of PNC, one of the leaders in my team, we built up sort of an internal platform which we called Control Hub, which was like a bit of like a low code platform to build controls. Okay. To be able to like ingest the data from our systems and then write controls to make sure that certain checks were met and passed regulatory muster. So, and I think, we did it sort of, we took a platform mindset there, but I think most of the banks have done something. And just know how to navigate that in the startup struggle. I've seen it over and over again with the fintechs. So that's more, I would say, institutional knowledge, maybe, but there is some technology as well. And then the data and just scale in general. I think those are the two advantages that we've got over the startups.
Got it. So, Rich, I'll just shift the mood a little bit because you have talked all along about technology, and this probably is the most technical podcast episode that I'm doing in the series. And so I'll just switch a bit towards the people side of it. So since you have built large teams, worked with large teams, what do you think is a key mantra for building high performance teams in banks?
Yeah, and I'm not sure it's different in banks, I would say. Having been, the first half of my career was sort of not banking, and the second half has been banking. I think it's the same. I could go on and on. My team knows this. I'm super passionate about the people side of things. And I really believe in banking, maybe in particular, but it is something that actually scales. So one of the terms I use all the time, with my leadership team and management team was, hey, I want to be a talent magnet, right? Talent actually has gravity, right? The more people you have that are talented and happy, and engaged, passionate, the more people that want to join your team. It has a gravitational effect, right? And so it's really critical. But, my mantra would be, hire strong, humble people and give them a mission worth following, right? Like I believe strongly in the humble piece of this, right? Like I think Netflix had a comment at one point, which is we don't want brilliant jerks, right? Like, so I believe like part of being a strong team, strong player is not just your raw skill, but how well you perform with the rest of the team, right? But hire strong, humble people, give them a mission or give them a vision to follow. And I think it's really important that you connect the everyday work that you're doing with that vision. In lending, as an example, right? When I started as the CIO of lending, and when I took the role, and part of the reason I took the role is, from a banking perspective, what's more important than buying, than going to college, right? There's a student loan in the U.S., right, that you're typically taking out for that. What's more important than buying your first car? What's more important than buying your first home? Without lending, without a mortgage, without a car loan, without a student loan, you're not able to do those things, right? Yeah. It is probably the most personal, banking products that people have, right? Like, so it starts there, right, from a vision perspective. And then, if you looked at lending 4 years ago, right, I would say lot of opportunity, right? Like, let's streamline the process end to end, right? Like, be completely digital, great experience, auto originate, right? Like, from where we were to where we're heading, and we launched. We have all of our consumer credit cards on the platform that we launched earlier this year, actually, or late last year, and then migrated everybody on this year. So I do feel like you got to connect people with, like, what's the why, what's the vision, and what part of the vision was really changing lending and streamlining it. Also changing how we operate, right? Like I believe in more of a tech company culture, right, than a traditional banking tech culture, right? And so that was part of the vision, right? And then just connect people to it and go. That's the basics. But again, I could go on and on. I think there's a lot to this topic. I think it's really important. It's all about, in the end, great people do great things. It's not like a great process, right, does things, or just great technology, right? You got to have the people. They're the engine that makes everything go, and you got to treat everybody with respect. You got to develop people. They need to know that you've got their back when things get hard, because they will, right? You got to challenge people to stretch and grow, right? Like, these are all, again, my team would know I preach this stuff constantly. I think it's really important.
Absolutely, Rich. And thanks for sharing all of that. And most importantly, what you mentioned, that a lot of things would not have been possible if, let's say, lending or banking was not there. So it indirectly makes a lot of difference to people's life on a day-to-day basis. And that gives us the why. And the reason we have been working in banking, because we get this kick. In fact, in a lot of our previous episodes, we've discussed this. And this usually have been our first question. We ask the guest, is banking the most important industry in the world? And then people start sharing their views. But it's quite clear, because when you see there are dedicated newspapers which run on banking, financial services, compared to any other industry that you might actually see. So horizontally, it basically impacts everything in the world. So that's basically the motivation that you get while working in banking. So
Absolutely.
touching on that, the people aspect, uh, and generally, let's say if there is somebody who has just entered into the shoes of a leader, let's say a CIO who has just, and a young CIO, let's say in early 30s, of a mid-sized bank, they come to you and they tell you that I don't know how to start. There's so much going on at the moment in my bank, but I don't know how to start. What would be your advice to that person? How should they take their initial 60, 90 days in that bank?
Yeah, I mean, I'm not sure I have anything earth shattering here. This is a, frankly, right. I was a CIO not so long ago, and when I talk to others, right, there's always sort of the 60, 90-day plan, right. I would say I believe a lot in balance, right. So being thoughtful and strategic, but at the same time sort of being tactical and action oriented, right? You got to do both, right? I would say, first you got to listen, right? You got to listen and sort of observe the landscape, right? So, and again, this is nothing earth shattering, but like, map out the tech stack, map out the stakeholders, the business, your business stakeholders, talk to business leaders, talk to not just the sort of frontline business leaders, like the revenue side, top line, but also sort of operations and, the back office staff, what frustrates them, where are their performance problems, I believe, again, everybody has a different style. I have my style. I'm a pretty much, I believe a lot in informal discussion, not everything through PowerPoints and sort of formal channels. So like, you're going to hear more in like one-on-one discussions and hallway, water cooler discussions than you're going to have through formal PowerPoint decks and things. So, but you need to really do an assessment of the people, process, technology that you're now coming to lead, right? So that's like number one, just sort of assess. I do think have a particular focus on pain points, and maybe another, take a step back, sort of another philosophy of mine, and it's not just me. I think the majority of tech is here, right? That, we're, as tech leaders, it's not tech for technology's sake, right? It's not technology for technology's sake. It's about making, a difference ultimately to help move the business forward, right? And we need to be, maybe obviously tech is our role, and so we need to be oriented towards tech, but we need to be business minded as well, right? 30%, maybe it's 70-30. I'm a 50-50 person probably. I view myself as a business and product person as much as a technologist. So I think, that's really important. So, first assess the landscape. Second, I would identify some pain points, right? And third, I would try to get a couple quick wins, right? You need to show that there's balance, right? Again, in that first 60, 90 days, that you're being thoughtful, that you're planning a roadmap of, how you think the organization should move forward, but you got to also take some action. And I really feel like, this is another thing that I used to tell my innovation team and also my more recent lending team, is that when you're in these sort of roles and environments, you have to earn the right to do the big things, right?
Yeah.
So, and the way you earn the right is by building trust, right? So some quick wins builds the momentum and it helps earn the trust, and it earns you the right to then say, oh, I want to take on this bigger, more strategic, more costly, more risky endeavor, right? So, the last thing I would say, on the people side is, often you'll find people that are, are like-minded, who are, builders or advocates, that are going to be important, right, to your success as you move forward. Some of those are, people that are going to report to you. Some of them are deeper in the organization. I think it's important to identify those folks. I think lastly, I would say is it's important to know also what your strengths and weaknesses are, and to make sure that in the new team that you have people that round out the team, right? It sometimes, and I've been guilty of this in the past, and I've learned from it. Sometimes it's sort of natural to just bring in all like-minded people that are like you, but that doesn't, that means you have weaknesses, right? In other areas, right? If you're very strategic, you tend not to be tactical and detail oriented, right? If you're really delivery focused and detail oriented and go, you tend not to look at the big picture, right? So you need as a team to make sure you sort of check all the boxes. And sometimes, it's easy to go and sort of just, you gravitate towards the people that are like you, right? And you got to be careful with that. So yeah, that's my advice there.
Great, Rich. So that concludes most of our questions, but I just have some quick rapid fire questions for you now. And I'll just read them for you, and you have to answer very quickly for them. Okay? All right. So question number 1. A book that you would recommend every banker must read.
Yeah, I'll go with... and this is now I looked it up actually, almost 15 years old. It's the Lean Startup.
The Lean Startup,
okay. Tried and true book, but I find most people haven't read it. And I think it's not a banking book, but I think it's a different mindset than banks typically operate. So I think it's a good way to challenge sort of status quo at a bank. And given the innovator in me, I had to pick it something.
Right. Okay, second question. What is the most underrated trend in banking?
So I'll surprise you and say AI.
Oh, wow.
and why I say it's underrated, I mean, it's obviously super hyped. There's very little traction in banks, right? Because they fear it. I do feel like, there are real risks, reputational risks and compliance, legal, et cetera. But there's a massive opportunity, and the risk can be mitigated. And I think banks are moving too slow.
Understood. Okay, next question. If you are starting your career today, or let's say if you're starting something new today, what would you do?
I'm a startup guy. I think if I would, know what I know now, I'd definitely do a startup. I know banking. I would pick sort of and I don't know what the vertical is, but I would take an underserved vertical and couple it with sort of embedded banking. I'm a big believer, this, we've talked about it. I'm a big believer in embedded banking.
Yeah.
Unlike, I'm going to go on a little tangent, unlike the CEOs, of the big banks want the bank to be at the front of everything. They want, to be top of mind. And in reality, I mean, even in the examples I gave, buying your first home, the mortgage isn't the point. It's a means to an end, right?
Correct.
Buying your first home is, but yes, you need the financial services there. I just believe so strongly that, financial services are more going to power what the real end goals are, and we're still early in this, and that's where I would go.
Got it. Okay, next question. What is one legacy tech that you would actually defend forever?
I think you might know this based on the earlier conversation. Just batch.
No.
I think done
batch,
right. It's still incredibly efficient, scalable, resilient. It's cost effective. Everybody wants real time, but sometimes batch is the right answer. And it's not sexy, it's not cool, but it works. Yeah.
All right, last question. New York or San Francisco?
San Francisco.
Okay, Pittsburgh or San Francisco?
Pittsburgh.
Okay, so everyone, Rich, has been born and brought up in Pittsburgh. That's correct, right?
Yes. I've been here, never left, a couple times. I actually interviewed for a job out of school in San Francisco. I almost took it. I didn't. Then we got married and had kids and it was over.
And then PNC happened.
What's that?
Then PNC also happened.
Yes, that's right.
All right. So,
but
great,
I
Rich.
suspect I won't end here. I think we'll move, right? Experience something different. Yeah.
So it would be San Francisco then,
Maybe.
or Mumbai. All right. So, Rich, thank you so much for giving me time. As always, I learned a lot from this discussion, and I hope that most of the people who would listen to this, they would learn a lot about banking in general, banking in US, your work that you have done. And we talked a lot around course. Surprisingly, this discussion was a lot around course today, but very insightful for me especially, and should be for everybody who is listening today. Thank you so much for coming, Rich.
Yeah, I appreciate the invite. And, people can reach out to me on LinkedIn if they've got any questions.
Great. Thank you, Rich.
Thank you.